All right, Bulls and Bears, we got a lot to talk about today. Discovr Card, Discover Financial, issuer of the credit cards, one of the biggest issuers of credit cards. They are reporting some very eye-opening numbers. We're going to get into that today. Also, we want to get caught up on a lot of other news that came out the last 48 hours because I haven't put out a video. So sorry that I missed you guys. I had some technical difficulties the last couple days, and it actually wasn't my equipment this time. It was the upload process and stuff like that. So got all that sorted out, I think. Hopefully this goes good today, but please make sure you are still subscribed, and let's go ahead and start right here with a chart. And this is, again, very eye-opening, right? So we're at 5.7% default rate, and this has been steadily rising, except for a minor blip there, but steadily rising, right? And we said this was going to happen, right? We're going to talk about that in a minute. But 5.7%. Now let's go back to this side of the chart here and try to find 5.7% during this rise right here. Folks, that's going to put us right about here where my mouse is, mid 2008. And we know that late 2008 was the official beginning of what people refer to as the Great Financial Crisis, or not so great, depending on your perspective of that financial time frame there, that era. So what does this mean, folks? Are we going into another financial crisis? I mean, the numbers say that, right? And every day, pretty much, we find other numbers, other data that points to, hey, we're on the same path as what we were back in 2007, 8, and 9, right? So well, let me know what you think about this down in comments. But folks, to me, this is pretty alarming. And will we keep rising past where we peaked out? We peaked out at about a 9% default rate in 2000. Well, that peaked out, looks like 2000, almost 2010, right? So it kept rising and rising and rising. So this time, how will credit card companies react? Are they going to start dropping the credit limits? They haven't started dropping them yet, and we're already more than halfway to that 9%, right? So it's very interesting that they haven't cut the credit limits yet, that they're not stopping people from going further into debt, even though default rates are rising, right? And this is just one company. But overall, we're not seeing credit card companies drop these credit limits. And remember, this is the key driver to the economy. As long as people can keep spending on their credit cards, the economic numbers are going to look pretty good. You're not going to see a tsunami of layoffs. Of course, we're still seeing a lot of layoffs, but it's not economy breaking type of numbers because people can still spend. And in this case, credit cards, swiping credit cards, borrowed money. As long as the credit card companies allow people to go further into debt, they can kick this can down the road for a very long time, longer than people expect, right? And going back to this chart here, remember, ever since the beginning of 2022, what have I been saying? It's going to get worse. It's going to get worse. It's going to get worse. And there were several people out there that called me doom and gloom. They said, no, it's going to start getting better because of the jobs numbers. People are going to start paying down their credit card debt. Defaults are going to decrease instead of increase. This is what some people were saying. They said, look at the unemployment number, look at the jobs number. These are great. These are strong numbers. The consumer's resilient, right? They actually believed all the talking points uh, and all the talking heads. And what were they telling us? The consumer's strong. The consumer's resilient. The economy's strong. Well, if the economy's strong, why are defaults rising? Remember, the consumer is the economy, right? The economy is about 70%. It consists of 70% of consumer spending, right? And there's a lot of other things in there, but the consumer is the big one, right? And we're seeing defaults continue to rise. So where is the strong consumer? Please answer me that question, maybe down in comments. A couple people commented here on this chart here. This is out of give credit here where credit's due. Reventure Consulting, or maybe it's Reventure Consulting. So a very nice chart, by the way. Um, very nice. Someone said, and most will never be able to pay the cards off. I believe that. See what somebody else here said. Core inflation just ticked up. The feds might have to raise interest rates. This will make the situation worse. Yeah, imagine now with inflation higher than they expected, not higher than you and I expected, right? I've been telling you things are going to get worse. Inflation is going to get worse. But now all of a sudden this unexpected inflation number the inflation continuing to rise now, the CPI, worse than expected, worse than they expected again. What is going to happen to default rates, right? We're already more than halfway to that 9%. Are we going to skyrocket past 9% in the next couple quarters? And remember, this is just as of the first quarter. Just wait till the second quarter comes out. We have what, April? We're almost done with April. May and June. So in July here, in just a couple more months, we're going to see what's going on here in the second quarter. And guess what? It got a lot worse. I can guarantee you these default rates did not decline. Uh, Most people not paying off debt. Most people getting further into debt. I'm starting to sound like a broken record here, but it's still amazing how many people don't realize that things are going to continue to get worse because the solutions that are being put out here are not fixing any of the problems, right? The cost of living is not going to come down with the $1 trillion spending package, right? It's just the opposite. The more spending packages you try to throw at this thing, the worse it's going to get. All right. So wanted to put that out there, folks. Let me know what you think about that down in comments. Let's get into some other news that's come out over the past couple days. Some of this may be news you've already heard elsewhere, but people were asking me for my input and for my take on a couple of big news items here that came out. Next, let's talk about this capital gains tax proposal. The top bracket is 44.6%. This would be the highest in, like, I read, 100 years. So this 44%, 44.6 is for the very top income earners. You have to have over $1 million income, with over, I believe, 400,000 of that being investment income or capital gains. So some people say, well, yes, let them go after the rich. By the way, it's going up for everybody too, not just the rich, but the highest tax bracket is the rich, is, you could say, I guess, rich, 400,000 capital gains. You're doing pretty good. Some people may not call that rich, but it's doing pretty good. But what a lot of people are looking at is they're saying, yeah, take it to the rich. The rich need to pay what they're calling their fair share. Here's my take on it. I think there should be a level playing field. I think that the rich should pay more. But here's the thing, where's this tax money going to go? All right, I just want to give you the big picture on this. Let's take a look at this from a higher level here. Where's this tax money going to go? Is it going to go towards helping you and me or anyone that actually needs this? Is it going to go towards low-cost housing? Is it going to go towards getting homeless off the street and maybe converting some of these vacant buildings into homeless shelters? Is it going to do any of that? I would say a big N and a big O. Capital N, capital O. I would say no, because we haven't seen it so far. All the tax revenue that is being collected, is it making things better? As home prices are higher, more tax revenue comes from that, but the deficits are still exploding. Is this going to cover the deficit gap? No, it's not. And will this money just be sent somewhere to some other country, right? We see what type of spending is happening out of Washington. And we see, Uncle Sam is failing. They're failing us, right? So the more money they collect in taxes, I don't think it's going to make anything any better. But it is a big news item that people were talking about. So wanted to give you my opinion on that. Let's take a look at what's happening out in San Francisco. Folks, this is massive. 90% discounts on some of the office buildings in San Francisco. This is from the 2016 price. That's a 90% plunge from the $62 million. Wow. In 2016. And some people say, well, it's San Francisco. Folks, what happens in California eventually starts spreading across the nation. California is just the place where it starts because, well, we're pretty crazy out here. We got the $20 an hour minimum wage, and a lot of restaurants are not going to survive. I think we're going to see a fast food apocalypse out here in California with this $20 an hour minimum wage. And it's also going to affect a lot of other businesses because people are going to be leaving other jobs paying $16, $17, $18 an hour to go to work at fast food. So it's going to get really interesting out here in California, that's for sure. I'm not a big fast food eater, so I don't really care too much, but I think there's going to be some contagion from this $20 an hour minimum wage situation. Folks, bottom line, buckle up. Things are about ready to get a lot more challenging. If you're someone that's still ahead of the game here, if you're saving up money, that's a very good thing. Most people aren't. Most people, their savings are dropping, and we're seeing a lot of people go to plan B, C, and D for paying off bills. And just a couple examples that came out over the past few months is people are taking record amounts of items into pawn shops. They're pawning off items. More people are borrowing from 401k. We've reported on that here a few times. Record outflows in 2023, meaning early withdrawals from 401k accounts. More people deciding not to put into 401k, right? So what people are seeing is their savings isn't keeping up with the cost of living. So does it pay to save anymore? If prices are going up faster than you can save up money, then it's actually better to go buy stuff, for lack of a better term, go buy stuff now before it's more expensive down the road. In other words, think about this. 5 years ago, somebody starts saving up a payment for a house, a down payment, and maybe they're close to 20%. Most people probably don't even do 20% now. I think it was like less than 5% of the borrowers actually have a 20% down payment. But anyways, people save up a down payment. The next year comes, they saved up maybe an extra 10%, but home prices went up 12%. And then they saved up maybe another 8% the next year, but home prices went up 10%. You see what I'm getting at here? The increase of the asset that people are saving up for, the price for the asset's actually rising faster than they're able to save, right? Which doesn't make any sense. So of course you're going to see a lot of FOMO, fear of missing out, people just going out and buying right away because they see these prices skyrocketing out of control. And yes, it's still happening. Let's talk about the home prices here in a minute and some of the insanity that's being done to quote unquote help people, right? So let's take a look at this here. As I said, the housing bubble is not going bust. Yes, there's been some price corrections, but take a look at this again. For those that didn't believe me, and there was quite a few people here on this channel that didn't believe me when I talk about housing, it's happening again. It's playing out just as I expected. Out of Redfin here, cost of buying a home in America reaches another new high. Another new high. Now, this is not every zip code. Redfin doesn't operate in every zip code, every small town, but they operate in most major metropolitan areas, right? So this is huge. The average interest rate, 30-year mortgage, even though it's over 7%, we're still seeing these home prices remain elevated, folks. This is insane, but this is the world we live in, and we're going to talk about why this is happening right after this. But let's get into some of the numbers here. Meanwhile, the median asking price for U.S. home, what homeowners hope, now this is just hope, will sell for, jumped to a record $415,000, right? For the 4 weeks ending April 21st. The median sale price, what buyers actually paid for a property, also hit a record in April, reaching $383,725, according to Redfin. So both what sellers are asking for their home and what buyers are actually paying for the home, both reached a record high, right? How do you explain that? Well, here's another example of what is going on in this economy. We've got programs like this one. This is another recent article here. Mortgage assistance program opens in Atlanta. We're seeing these all over America, thousands of different cities, different programs. This will deliver up to $9,000 in down payment and closing cost assistance for first-time home buyers in 21 metropolitan areas there in Georgia, right? So there is your answer, right? They're helping people qualify for buying these, in many cases, people say overpriced homes. And that's not everyone's opinion. And some people say there's no housing bubble because there's a housing shortage. Well, along with the shortage, we've also got record low demand because sales have dropped off of a cliff. And we're starting to see that play out now in the economy with so many layoffs. Remember, as the housing market goes, the economy goes, but it's happening a lot slower than the previous housing bubble going bust. And some people say they're going to throw so much assistance at this that the bubble will never go bust. Some people are saying prices are going to continue to accelerate to the upside, right? Is it possible? Is it possible that they do not let the housing bubble go bust, right? Go back to 2020. Will they put a freeze on foreclosures to prevent the bubble from busting? Will they come out with more down payment assistance programs? And this might be shocking to some of you, will they do what they did with student loans? They start forgiving the debt. to prevent a foreclosure tsunami, right? All these people out there predicting a housing crash, they don't even think about these other things, right? But we already saw it just a few years ago. We saw all the ways they can keep the economy from imploding and throw so much money, inject so much money into the economy that things go the opposite direction. Instead of going down, like we saw in previous downturns and crashes, things go up, prices go up, right? People still are saying that can never happen, but it's already happened, right? We should have had a major collapse in 2020, a deflationary collapse. Home prices should have came down by 50% with the amount of job losses that we saw. Um, Everything should have crashed. The cost of living should have come down massively, right? But that would have been tsunami. It would have been a hurricane. It would have been so many job losses, and it would have been Great Depression 2.0. But when you throw enough money at the economy, when you throw it out there into the system, not just the stimulus checks, all the other programs that were put out there, we see the banks being rescued. The debt is exploding like never before, right? This is record territory for debt expansion. And that's why it's very easy to say what's going to happen here going forward. Inflation slash the cost of living is going to continue to get worse, right? So we need to hedge against this. One of my favorite ways to hedge is still silver. And that's another thing. Let's get into that. People were talking about the silver price. We saw a big surge in the price of silver, but then we saw a big drop, and it was significant, right? So let me talk about that because people were saying, hey, JJ, I thought silver was going to go up. Well, first of all, when I say go up, it doesn't mean it's going to go up in a straight line without any pullbacks. Right? It's not going to happen. But here's the thing: they could send the price of silver back down to $20 at the click of a mouse. But here's the thing: I don't think they'll do that because the price of the real physical coins, the real physical asset, the real metal, is going to become so far detached from the paper price, and the paper price is what they manipulate. Remember, they're manipulating the price of silver and gold and lots of other things, but they're doing this on the derivative market, right? They're short selling these things at the click of a mouse, digitally. But the more physical silver or physical assets you buy fights against this, right? Because the higher the price goes physically, the less likely they'll be to suppress it. The less likely they'll be to suppress it on the paper markets, right? It should be the physical asset sets the price, right, for the digital price or the online price. But that's just the opposite. Right now, the digital price is controlling the physical price, right? Because if they set the digital price to $20, not many people are going to go out and pay $30 for the actual physical item. You see what I'm saying here? A lot of it's psychological, but it's working. But what's going to happen when the suppression ends, right? I'm one of those that think it's going to be $100 plus silver. In fact, I think $500 plus silver per ounce is going to be happening some point in the very near future, not 10 years, not 5 years. I'm talking about just a few years, right? My opinion on that. So that's one of the ways I'm hedging against this. Um, Again, inflation that I think is going to continue to get worse because all the things we talked about before, they're not doing anything to solve this. In fact, the things they're doing are making prices stay high and are creating more inflation. Look at the housing program out of Georgia there. You think home prices are going to go down in Florida now that you've got all these, who knows, maybe hundreds of thousands of new first-time home buyers that are going to get this down payment assistance, and they're going to start bidding on homes. And I'll be very surprised if home prices in Georgia go down. But these types of programs are happening across the country, right? It's something in every state that you look at. All right, now let's go to something that we are seeing some deflation. This is one of the few areas where we're seeing deflation. And folks, this is electric vehicles, folks. Tesla's down 30+%, and it's likely to get worse. Take a look at this. What's happening out of Hertz here. Hertz loses another $200 million from its EVs. Hertz is increasing the number of EVs it will sell from its fleet and will take a loss on those sales. So what's going to happen when another maybe 10,000 vehicles gets put up for sale on various car sale platforms like Carvana, CarMax, etc.? Car rental operator Hertz reported it's another $200 million due to its EV gamble. It lost another $200 million. In the first quarter earnings report, it said it upsized its prior EV fleet drawdown plans by an additional 10,000 electric vehicles, which led to the company incurring $195 million charge to vehicle depreciation for writing down the value of EVs held for sale. The company previously said it would sell off 20,000 folks. So the price corrections in electric vehicles are going to get bigger with another 10,000 vehicles just from Hertz. What about all the other people selling their electric vehicles, right? So could be a good time to buy an electric vehicle and maybe even better in a few months. But folks, another thing that we told you was going to happen, right? So everything's continuing to play out pretty close to how we expected. A lot of manipulation, a lot of basically trying to control the price. There's no free market anymore. It's not even really a market. A market, you have buyers and sellers that are on equal footing, right? You don't have trillions of dollars being created and thrown into the economy, out of some bank somewhere, right? So this is the world we live in, folks. What's going to happen, folks? Will we see a meltdown when this price manipulation ends, right? If the price manipulation does end, we will see a meltdown. The question is when and if that will happen, right? So we have to prepare for everything, folks. It's crazy. I wish I had a definite for you, but it's really hard to predict a an economy that's being steered, right, by some people over there that think they know what to do, or they think they know what's best. So that's why this whole thing needs to come down. This whole thing needs to crash and start from scratch with something better, right? But what do you think about those Discovr Card numbers we talked about at the beginning? We're halfway to where we were in the financial crisis, folks, and it doesn't appear to be slowing down. In fact, if you looked at that line on the chart, it's getting steeper. So interesting times, folks. Let me know what you think about this down in comments. Please make sure you are subscribed, and we'll see you in the next video. Thanks for watching, people. Bye.